The week started out with the US dollar almost suspiciously bid after somehow absorbing a round of discouraging data this past Friday, including another subdued print in the hourly earnings component of the US jobs report. There was nothing to really assign the dollar demand to other than short-term profit-taking on an extended dollar short position. But as the week wore on, the reality of less than enthused sentiment towards the US dollar came running back, with the minor run in the buck quickly sold into, led by the euro charging right back towards the 2017 high it was unable to clear in the previous week. The initial catalyst for the renewed dollar selling came from reports out of China that it would slow down or even halt purchases of US treasuries. That news came Wednesday and was followed up Thursday with some solid Eurozone data, relatively upbeat ECB minutes, more dovish Fed speak, and another soft US inflation reading, this time in the form of producer prices. And so we come into Friday with the dollar under serious pressure and now at risk of extending declines. The yen has actually been the strongest of the developed currencies this week, with the currency getting an added boost after the BOJ announced it would be reducing purchases of ultra-long bonds under its QE program, a move that caught the market off guard and a move that was dubbed a shadow taper. Interestingly, when considering traditional correlations, the yen was able to make this run of about 1.75% into Friday, with U.S. equities continuing with the melt up to fresh record highs. As far as today's calendar goes, we've already seen China trade data come in slightly better than expected, though this hasn't had any major impact. Import prices were a little bit concerning. In Europe, the calendar is light and the market will be looking to see what comes of the German coalition talks, which were expected to wrap up. If Merkel is unable to broker a coalition deal, the euro could come under pressure on the expectation of another election and all of the uncertainty this brings. But the big focus on the day right now will be in North America, with US CPI and retail sales likely to determine the fate of the buck into the weekly close. It's worth noting, whatever Fed speak we do get today comes from the more hawkish of members, with Harker and Rosengren slated to speak, though this could end up hurting the dollar if either one shows any deviation from their outlooks. We also get some earnings releases out of the U.S. financial sector, with BlackRock, JP Morgan, and Wells Fargo to report. That's all for now.